The Bitcoin ecosystem is super interesting today. There are Bitcoin Ordinals, runes, BRC20 tokens, and even full-on Bitcoin layer 2s that promise to scale Bitcoin network for arbitrary use cases. But is this sector actually worth investing in? Are these technologies actually advancing the adoption of Bitcoin? And which projects are worth holding and which ones are not? In today's video, we will answer all these questions. Make sure to watch till the end as I'll reveal the top 3 Bitcoin ecosystem picks that I have in my portfolio. Welcome back to the Virtualbacon channel. My name is Dennis. I'm a crypto angel investor for the past 6 years, and I have invested in over 100 crypto startups. On this channel, I share views on market trends and investing strategy to build wealth in crypto. Now, a really brief bit of background here. What are the innovations happening in the Bitcoin ecosystem today? All of these innovations stem from the limitations of Bitcoin since the very beginning. As you can see here with this comparison between Bitcoin and Ethereum, you see that the main difference is that Bitcoin is made to be used as a store of value and a medium of exchange, while Ethereum actually supports programmatic contracts which you can create arbitrary applications with, such as DeFi, lending, staking, whatever. This limitation comes from 3 folds. Number 1, Bitcoin does not have programmability. It doesn't have a programming language that is Turing complete, which means it's not as powerful as Ethereum. And even if you are a super genius developer, you cannot create all of the applications possible. Whereas on Ethereum, it is Turing complete. This is why anything can be created. Number 2, Bitcoin inherently doesn't evolve as much. It doesn't have much upgrades. On the other hand, on Ethereum, it has constant innovations, not only with its core innovation, but also different layer 2s and different technologies building on top. And number 3, Bitcoin's scalability has always been a problem. Today, its block time is still at 10 minutes long, which means any transaction that you make, it has to take 10 minutes before it gets confirmed. This is very different from the 10 to 15 seconds on Ethereum. So imagine you want to make a decentralized exchange trade on Ethereum, you press the button and 20 seconds later it's confirmed. On Bitcoin, you have to wait at least 10 minutes. This is a big blocker. This is why essentially all the innovations today on the Bitcoin ecosystem aims to enable DeFi on Bitcoin. They want to do so by introducing a smart contract layer or a lightweight programmable, some call it MetaProtocol layer. These will enable things like token issuance, staking, DEX, and lending, etc. Now, before we get into the technology side, it's also worth noting that the ethos of Bitcoin has never been to compete with Ethereum and become this world computer. So we really shouldn't look at the lack of scalability and programmability on Bitcoin as a bad thing. Instead, I think the core difference here is that the assets locked up on the native Bitcoin blockchain, so all of the idle Bitcoin that's sitting in people's wallets and on exchanges, this is a big missing opportunity. If we can deploy all of these liquidity into things like decentralized exchange, issuing new tokens as collateral, lending, borrowing, etc., this will create a large wealth effect that benefits not only Bitcoin, but the entire crypto space. So when we look at these Bitcoin ecosystem projects, this has to be the focus. It cannot just be arbitrarily creating technology that scales Bitcoin because it's not meant for that use case. Okay, today there are 2 ways to go about introducing these new features. The first basket are projects around Bitcoin side chains and layer 2s. Bitcoin layer 2s are very similar to Ethereum layer 2s, and they're actually quite an old concept. You might have heard of things like Lightning Network, Rootstock, and state channels. These are all quite old technologies that already serve as layer 2 solutions. However, because these technologies do not have arbitrary programmability, they only work on scaling the main transferability of Bitcoin, but doesn't create more features. This is why the Bitcoin layer 2s that people talk about today all use a smart contract layer, usually based on the Ethereum virtual machine. By adopting the EVM, developers can create any applications with ease while using Bitcoin as the native asset. This also means these Bitcoin layer 2s can plug into the current toolset of Ethereum, such as wallets like MetaMask and infrastructure providers for nodes. The most popular Bitcoin EVM layer projects are CoreDAO, Merlin Chain, Babylon, and BounceBit. We will talk about some of these in a bit. The second category of Bitcoin innovation are around MetaProtocols that directly sit on top of Bitcoin. These protocols are programmable upgrades that directly plug into the Bitcoin blockchain instead of creating a separate blockchain like a layer 2. Although they are not as powerful as a full EVM layer 2, they are much more native to the Bitcoin network. This means you usually don't have to use a bridge to access these protocols, and you can use native BTC to transact on these protocols. The most important Bitcoin native meta protocols today are Ordinals, BRC20 tokens, Bitcoin runes, and Tap protocol. We will cover all of these in a bit. Before we get too deep in the rabbit hole, let's take a step back and let me explain why I am bullish on the Bitcoin ecosystem right now. You gotta look at the signs that the market is showing. Number one, the top two exchanges in Asia, Binance and OKX, are heavily investing and promoting the Bitcoin ecosystem. Binance has created many different educational and research pieces around the future of Bitcoin. The first sector is all around tokens, so the MetaProtocols we have talked about, runes and BRC20 tokens are all featured here. And they also highlighted a lot of the scalability layer 2s around Bitcoin. And they also actively follow all of the scalability improvements on top of Bitcoin. These are the side chains and layer 2s that we have also covered. The Bitcoin ecosystem is heavily driven by the Asian crypto audience. We first saw this with the Ordinals and BRC20 crates in the end of 2023. Just look at the price of Ordi. When OKX and Binance really stepped in, all of their retail audience jumped in, and this was the initial hype wave of Ordi, which brought it from $7 all the way up to $70, a 10x gain. When you look at the Bitcoin runes ecosystem today with its growth, it's very similar to the BRC20 playbook. Just go on CoinGecko and check out all of the top runes by market cap and look at these 7-day price performance. All of the top runes are up somewhere between 30 to 100% in the past week. But remember, none of these are listed on Binance yet, and none of them even have any decentralized exchanges to trade on. There is still a huge barrier to get into these. And the largest market cap rune today is only sitting at 900 million market cap. This is still quite a ways off from the peak of the hype wave from BRC20s. For a bit more background on the Bitcoin runes protocol and how it launched around the Bitcoin halving event, you should go check out my last video on the channel, my last live stream called "These Two Crypto Sectors Will Explode After Bitcoin Halving." TLDR is that at the Bitcoin halving event, the runes protocol launched right on the halving block. And this brought a lot of short-term hype wave, but all of that has quickly died down. And now, 2 months later after the Bitcoin halving event, we are finally seeing that consolidation breaking out towards the upside. So now that you know why I am bullish on this narrative, let's look at my top 3 favorite altcoins in the Bitcoin DeFi narrative. Number 1, we have CoreDAO with its token Core. Core is a EVM blockchain built and powered by Bitcoin. It uses a combination of delegated proof of work from the Bitcoin mining pools and proof of stake using its Core token. So it's a mix of both worlds, borrowing some security from Bitcoin. And because it's EVM compatible, you have all the features that we have talked about already. You can directly onboard onto Core using your MetaMask wallet just by adding a new network, and you can use all of the infrastructure there. Core already has a bridge live today for you to bridge your Bitcoin onto the Core chain. So there are 2 ways to do so. You can either go from your existing Ethereum-based blockchains such as BSC, Ethereum, Arbitrum, etc. This is powered by Layer 0, or you can bridge your Bitcoin directly onto Core and mint Core BTC using their native bridge. They also have an airdrop campaign going on right now called Core Ignition. This will go on for another 3 months. Essentially, this is just for you to bridge your Bitcoin onto Core and start using DeFi on top of this chain, and you can get extra rewards in terms of airdrops. Now, there are many different Bitcoin layer 2s out there. Why am I specifically bullish on Core? The first reason is that Core is not a new project, unlike BounceBit, Babylon, Merlin Chain, all of the other ones that are coming out this year. Instead, Core has already launched 1.5 years ago in February 2023. This means a large portion of the supply is already circulating. As you can see here, out of the 2.1 billion Core tokens of total supply, 890 million of that is already circulating at 42%. This is super important, as many people are pointing out in crypto Twitter today. When you have a new project with very low float, this means a little portion of the tokens are currently circulating, while a lot more is potentially coming onto the market from insiders, from VCs to dump and add to the sell pressure. This usually hinders the initial growth of the token price. Now, this is nothing wrong. It's just a feature of new project launches. Core actually went through this very similar price pattern as well. It launched at $4 and dropped all the way down to 40 cents. But because as time passes, this naturally eases, this is why Core's tokenomics is much better than all of the other Bitcoin layer 2s out there. You can do a search from all of the EVM sidechains layer 1s and layer 2s that borrow security from Bitcoin and use Bitcoin Bitcoin as asset, and none of them will have this tokenomics because this technology is so new. So because Core was a very early innovator and launched their token very early, their tokenomics is much better than all their competitors. In March of this year, people clearly caught on, and Core's price peaked at nearly $4, but it now sits at around $2, and it has been consolidating for the last 2.5 months. So I think this is a really good re-entry opportunity before the next leg up. The second project that I am super bullish on in the Bitcoin ecosystem is Tap Protocol. This is not a EVM layer on top of Bitcoin. Instead, it's a meta protocol very similar to Bitcoin Runes and Ordinals and BRC20s. Tap Protocol is essentially a protocol that sits directly on top of Bitcoin using the same technology as Ordinals and BRC20s, but offer much more flexible programmability. And Tap Protocol is much more decentralized than BRC20s. Let's take a look. So here is a comparison between BRC20s, Tap Protocol, Runes, and the Ordinals protocol. On the top half here, you see this is a brief representation of the Bitcoin blockchain layer. At the core layer, you have the native Bitcoin blocks. These are the native transactions, the native transfers. Directly on top, you have the Ordinals protocol and the Runes protocol. These are protocols that directly fit into the Bitcoin opcodes, or things that you can actually encode, and these protocols sit on top of Bitcoin directly. And then on top of Ordinals protocol, you have BRC20s, which is a experimental way to create kind of rough tokens on top of Ordinals. And then you have Tap Protocol, which is a new generation of fungible tokens sitting on top of Ordinals. In order to create fungible tokens, these are meme coins, stable coins, whatever, there are currently 3 protocols that exist on top of Bitcoin which are relevant. We have BRC20s, we have Tap Protocol, and we have Runes. Here on this comparison table on the bottom, let's take a look. The pro of Tap Protocol is that it's very powerful. It's more powerful than both Runes and BRC20s. You can not only inscribe or mint new tokens, so you can create tokens as a project or mint tokens from other people's project, but you can also natively transfer, stake, bridge, distribute, crowd distribute as an airdrop, and it has very low fees, and it's non-fungible based framework. In comparison, BRC20s, because it's very experimental, even though it's non-fungible, it's technically just a hack sitting on top of a fungible standard that is Ordinals, which means you only have very limited functionality, which is to inscribe, to mint, and to transfer. However, if you have traded BRC20s before, you know that it takes multiple steps, and any actions that you do with BRC20 tokens, it takes multiple steps. This is because BRC20s is really more of a hack than a official fungible token protocol. And then you have Runes. So Runes, even though it's not as powerful as Tap, it does have a very core differentiator, which is that Runes are directly based on the Bitcoin core blockchain, and it's UTXO based. This means it directly sits on top of Bitcoin blocks. So this makes it much more efficient, it's much faster, it uses less gas, and it does have more features than BRC20s already. So it's a good middle ground. Now let's look at the cons. So the con of Tap Protocol is that it's just a bit newer. It's just about to launch, we'll cover in a bit, and there are less infrastructure built for it. Right now, the main benefit of BRC20s is just that it's launched first as a fungible token standard. So this means there are more infrastructure and more projects building on top of it, but inherently it's the least powerful protocol among the 3. And Runes also, it's a bit early, but it's just starting to gain that first adoption wave. And lastly, in terms of indexer, which are nodes that actually look at the Bitcoin blockchain and tell the users and the wallets which tokens are belonging to which wallets, Tap does have a decentralized indexer, whereas Runes and BRC20s both have hybrid indexers. So Tap actually is the most decentralized among the 3. If this sounds interesting to you, you should definitely follow Tap on their Twitter account. And they are actually not as well known as most other Bitcoin Layer 2 and Bitcoin ecosystem projects. However, I really do believe they are one of the few innovators that actually created something new directly on top of Bitcoin. Just because they don't have many other buzzwords like Layer 2, ZK, Rollup, whatever, doesn't mean they are not innovators. It's much more difficult to create something actually new and useful directly on top of Bitcoin as a meta protocol, whereas creating a EVM layer and borrow some assets from Bitcoin is actually super easy today with the advancements of layer 2s. Lastly, the Tap token is not live yet today. They will have their TGE quite soon. In fact, they're having their token sale on CoinList right now. You can check that out and participate on CoinList. They really have a fair distribution schedule on CoinList, list. Usually most people can participate if they want. And let's see how this protocol launches after the token gets listed. I will cover more about this token specifically once it goes live. Okay, last but not least, the third pick in the Bitcoin ecosystem in my portfolio is actually runes. And I say runes instead of any specific rune because it really doesn't make sense to bet on any specific rune today. The way I look at Bitcoin runes today is that you really have to have a basket of all of the top runes in order to have full exposure to this technology. This is because Bitcoin runes is still very early days and it's only 2 months after its launch, which means there are not really any differentiators of these different projects just yet. You cannot build complex applications on top of runes yet. So all you can look at is who are the teams behind these new runes, and when the runes protocol is mature enough, who is likely to stick around and gain more adoption and get more upgrades to their runes projects. So to find all the top runes, there are 3 places you can check them out. You can go on OKX Web3 under the runes tab. You can sort by all of the market caps and all by trending volume or holders. Or you can go on Magic Eden under the runes tab. You can do a very similar search. Unisat wallet can also do this exact search. Now you can look at runes using a coin tracker app like CoinGecko. However, just keep in mind that it's not going to be the most accurate on here today because the market caps are not reflected yet, and because the infrastructure to index these things are not yet implemented in CoinGecko. So your best bet is to go to OKX, Magic Eden, or Unisat. Now I have 6 runes in my portfolio today. Let me point them out to you. The first rune I have is Dog Go to the Moon. This rune is created by Leonidas, who is one of the OG creators and developers in the runes and Bitcoin Ordinals ecosystem. And he was the one that airdropped the Runestone NFT to all of the Bitcoin ecosystem fanatics, which led to the Dog Go to the Moon rune eventually. So excluding the number 1 rune, this Feihu rune, which is heavily centralized, Dog Go to the Moon is clearly the market leader today at 900 million market cap, whereas the second largest rune protocol is only 260 million. Do not underappreciate this RSIC rune. I really think all the branding and how this rune launched is very similar to the Ordi launch in the BRC20 crates. In fact, the RSIC rune actually launched on OKX Launchpad. The OKX Launchpad is very prestigious. They even launch projects like Sweet and Polyhedra, which are all multi-billion-dollar projects. So RSIC is definitely a good pick, and I have it in my portfolio as well. The third rune I have is Pubs World Peace. This is the Pubs token that we have already covered in my first runes protocol video before the Bitcoin halving event. The advantage of the Pubs rune is that it already traded on many exchanges before the Bitcoin halving and the Bitcoin runes protocol launched. In fact, Pubs had a large run up on the Solana chain. They had a Solana version of their token, and now they have migrated that to the runes protocol. So that's their benefit. Their ticker is already widely penetrated on the typical meme coin trader scene. Do not write them off. I do believe they will remain a top 5 rune. These 3 runes make up the large portion in my portfolio, and the smaller portion I have in 4 different runes that are smaller in market cap. These are more sleeper picks. I have a little bit of the decentralized rune. This is the number 2 rune, a very prestigious slot. And although it's currently only at 70 million market cap, this is actually made by the team of CyberCons, a very established NFT project. So I do believe they will remain quite strong. I also have a bit of this Satoshi Nakamoto rune at 57 million market cap. This is the only open mint rune on my portfolio. Open mint meaning that at the Bitcoin halving block, this rune basically dropped in stealth and just comes onto the market. And then all the people that flooded into the scene and trying to buy up and mint new runes saw this as the only one that wasn't pre-mined, and they minted a lot of this. So this is a really sleeper pick, and Satoshi Nakamoto is just such a good meme, so I really think there is a established team behind this. I also have the Bitcoin Wizards BRC20 token in this portfolio because they have been trading for very long already, similar to the Pubs token, and they have not yet migrated to the runes version. So I think there is a lot more to look forward to this. Last bit of note on the runes ecosystem. I don't think you need to pick out any specific low cap gems on here. All of these are undervalued and all of these are performing super well in this comeback. Just go on any of the trackers and look at the price performance of all of these runes. We have Dog Go to the Moon that has already done a 4x in the past 2 weeks. PUBs went from 11 cents to 22 cents, a 2x. RSIG also went through a similar launch dump. So it dropped all the way down to 0.6 cents, but now sits at 1.3 cents, so another 2x. You have Satoshi Nakamoto also launching at $8, dropping to all the way down to 85 cents, but now is back up again to $2.82. So all of these have that same comeback J-curve chart that you observe, very typical of a new technology that is way too hyped up right at launch, and it has that initial drop taking a couple months to consolidate before all of them start to pump again. So this is why I am heavily positioned in the Runes ecosystem today. I do think a lot of people are writing this off way too early. They look at what happened at the Bitcoin halving event, and just because these runes didn't go 10 to 100x directly, they just write off the whole thing and never come back again. And that's why I think the potential is still here. Okay, lastly, some honorary mentions that we haven't covered in the Bitcoin ecosystem. Of course, people will ask, why don't you have Stacks in your portfolio? This is the OG Bitcoin Layer 2. I get it, Stacks is the OG Bitcoin Layer 2 project, and their token even precedes that of CoreDAO. However, because Stacks is a little bit too old with their legacy technology, I don't think it really matches up to the standards of current EVM layers for Bitcoin. You see, Stacks has a very peculiar way of doing things, and when you integrate with the Stacks ecosystem, you're almost like adopting a specific alternative layer 1 that isn't really Bitcoin based or EVM based. You see here, you have to go through all of these and use all of their native API. And Stacks also has their native programming language called Clarity, which is very different. So in order to develop your application on top of Stacks, you are tied into this ecosystem. Yes, it's a very mature ecosystem, but there is a lot of blocker here. Just look at the Stacks ecosystem out there today. There are not that many applications or wallets that support this. You cannot use Stacks directly from MetaMask. Yes, you can use a powerful Bitcoin wallet like Xverse to access Stacks, but look at this. The Stacks wallet address is completely different from that of Bitcoin's. It's not interoperable. So when using Stacks, you are essentially using this separate blockchain. And this is very different from Ordinals, from BRC20, from Runes, which all use a taproot address. These are native to the Bitcoin blockchain. So this means your wallet doesn't have to natively support Ordinals, BRC20s, or Runes. They all just work as long as you support Bitcoin. This is not the case for Stacks. It has to be a very dedicated technology to onboard. This is why I am not that bullish on the Stacks ecosystem. There are also a few more Bitcoin Layer 2 projects coming up very soon. The most notable ones are Babylon, Merlin Chain, which is already live, BounceBit is already live trading on Binance, and B Squared Network. These are all very legitimate projects. However, they all fall short because of that new token launch and low float trap. Just look at BounceBit. Out of the total supply of 2.1 billion, 425 million of that is circulating, around 20%. So there is still a large portion of tokens to be unlocked, which means any price growth is not going to be very sustainable. These 4 projects are all supported by some large backers, and I think they all will do well inevitably when the Bitcoin Layer 2 wave hypes up again. All 4 of these projects are supported by some large players like Binance and OKX, so I do think they will do well. However, from a retail investor's perspective, I think the tokenomics of CoreDAO really sets it apart from all of the other Bitcoin EVM layer projects that are launching their token this year. Okay, that wraps up today's video. Let me know down in the comments if I missed any significant technology advancements in the Bitcoin ecosystem. I do think we will see a lot more cool stuff being built on Bitcoin quite soon. Tap Protocol, Runes are still early stages, and Bitcoin EVM layer 2s, although their tokenomics might be iffy, it's really exciting to see that liquidity that's currently trapped on the main Bitcoin network finally being unlocked and used in DeFi. When Bitcoin grows to multiple trillions of dollars in market cap by the end of this cycle, even if only 1% of that liquidity actually bridges onto these different layer 2s and layer 1s and sidechains, that will create a very thriving ecosystem for new tokens and new projects to innovate on. This is the core reason why I am bullish on the Bitcoin DeFi ecosystem. The injection of liquidity from Bitcoin is so large because Bitcoin itself is so large. So if you're bullish on Bitcoin, even if you're not bullish on the core technology of it, be bullish on the Bitcoin liquidity. Okay, that wraps up today's video. Before I go, make sure to follow me on Twitter at Virtualbacon0x. This is where I drop my day-to-day alpha when I'm doing research for these videos. All of the runes launches, when they're minting, which ones are getting listed, and new protocols that are launching on the Bitcoin ecosystem, I cover all of them with quick tweets when I'm scrolling the timeline every day. And make sure to join our Discord with the link in my bio, or go to discord.gg/virtualbacon. This is where I post my personal alpha, such as new altcoins, new airdrops, new token launches, trade opportunities. I even post Bitcoin analysis, altcoin analysis, trade setups, and we have a full community of over 3,000 members with our community analysts posting market updates every day. Check it out with the link in the description. Thank you for watching, and I'll see you on the next video.